Joined with me now to talk about investment and safe haven currencies is Thanos Papasavvas, a fixed income and currency strategist at Investec Asset Management. Thanos, at the moment we seem to be looking at quite a gloomy global economic outlook, particularly in the Western economies. The question is, where should investors be putting their money right now?
Well, in terms of overall investments, we always believe in a well-diversified strategy, and within the fixed income and currency areas, we have seen quite a significant increase and a strategic increase in the interest of emerging market debt, on the one hand, local emerging market debt, but also on the sort of more multi-strategy fixed income opportunities. And we tend to find that these sort of sectors do manage to avoid the sort of the risk-on, risk-off events which happen in this industry and this market environment by the diversification across the various asset classes.
We've always had our traditional safe haven currencies, the US dollar, the yen and the Swiss franc, but do you see this picture changing, and could we start to see new safe haven currencies?
Yes, we have certainly seen a change of that arena. Up until recently, the US dollar, alongside the yen and the Swiss franc, were the three safe haven currencies, especially the US dollar. And we've seen that with the events which have happened so far this year, the US dollar has in fact been the weakest currency of the majors. This is surprisingly weak to a number of investors, and the reason for that is clearly that a number of strategic concerns and issues are not that good for the US dollar. Apart from the politics, it's also the structural issues, the monetary issues, the political expectations going forward. So as a result, we're seeing a change of that. On the other hand, we've seen the emerging market currencies, a number of the emerging market currencies have started to perform better than previous expectations, previous periods of crises and corrections, global corrections. And clearly the strongest currency of all has been the Swiss franc.
Okay, let's talk about the Swiss franc then, shall we? As it's been extremely strong at the moment, hasn't it?
Yes, the Swiss franc has appreciated significantly more than all the other major and emerging currencies, basically for three reasons. Number one, as a proxy for the US dollar in terms of the safe haven overall risk. Secondly, because of the euro debacle which has been taking place, and the Swiss franc has seen the appreciation from that versus the euro. And third, because of the overall concern as to whether we're heading for another dip lower in global output. So the Swissy has been benefiting on all three fronts. However, it is exceptionally expensive from a valuation point of view, and for that reason, we've maintained our underweight exposure in the Swiss franc.
So if that is the case, what do you see happening to the euro and emerging market currencies over the next year or so? On
the euro, we're cautiously positive. We have, in the beginning of the year, when the euro was against the dollar at the sort of mid to high 120s, we thought that policymakers would do whatever is necessary to ensure that the single currency stays together because of the political, social, historical reasons. And we still do believe that they will try to maintain the status quo in terms of the euro membership, and clearly within pressures from the markets will continue to put pressure on the politicians, but the politicians will deliver, albeit slower than market expectations, and move towards some sort of a fiscal consolidation in due course.
Okay, and what about Europe's banking system? How difficult are the next 12 months going to be for the banking sector?
That will very much depend, I think, on the overall consumer sentiment and economic rebound from these levels. One key thing which we're looking at and analysing at present is whether the recent economic environment we've just gone through during the summer is just a temporary soft patch on the back of the developments in Japan, the developments of the sort of Arabian Rising, Middle East Rising, the developments of the political impasse in the US and Europe. So we don't know whether the recent economic data which has come out is simply a soft patch given the geopolitical developments which happened in the last quarter in the world, or whether it's the beginning of something a little bit more sinister. And our scenario is still of the former, in other words, that this is a soft patch, and we expect through policy intervention and continuing growth in the emerging market world to see this recovery come through. As a result of that, if that central case scenario is correct, then consumer sentiment should improve and help the overall economic stability.
That's great. Thank you very much, Thanos. There'll be more interviews taking place throughout the week, so make sure you stay tuned. Goodbye.